This is the St. Johns County Real Estate Auction Report brought to you by Vanta Quality Assets. You can find us at vantallc.com. Investors welcome. Now, let's go to court. And at the auction, we're going to start with this condo unit, actually. It goes for about close to 90 grand. Anyway, banner was at 78.2. I would think somebody would possibly send, do a bid on it, but they didn't. And of course, here's the Pro Max. I would say 65 would be pretty good. The banner was a bit too high. Going to the next property, which is 194. It's right here. Now, this is a nice home. The back is quite secure and full of trees, and it didn't sell because the banner was higher than the plaintiff total. What are these banks thinking? Okay, next one. This is a bidder. He was content to bid. Oh yes, he went all the way up to 300,000 in 100,000 increments. No banner, but the bank kept going on $100 increments on his $100,000 increments. A very weird bid. Let me show you. There we go. Very nice property, golf course, 563, but no, kind of a weird one. And yes, the next one is I gave it out. Sorry about that. That's this property here. Again, that didn't sell. It did not sell. Banner was at 102. The Pro Max is at 60, so did not sell. Next one. Next property canceled. Let me show it to you anyway. 326 Redwood. Look for it at another auction. It's a condo. And that's basically all she wrote when it comes to the auction. And in other news, not much news to talk about. They still talk about, housing, large homes, multi-million dollars homes still going up, regular homes going down, and hedge funds buying and so forth. Same old BS, but we're looking at a housing index chart here, 10-year chart. And again, this is the drop in 06. We have the bottom in 09, met again in 11, and then housing started going up just a little bit, just normal trend, if you will. Not in bubble territory, nowhere near as far as the housing index is concerned. And now it's going down a bit. Let's look at a 3-year chart. Kind of hone in on this. You had a uptrend all the way back from the mid 2011, and then you had a little dip, just a few months, went back up again. Now we're meeting a little bit of a dip again, and it looks like that trend line, which is 190, just about being breached. Let's look at the 6-month chart of the housing index, and yes, it did breach. Went to 188, bounced to 190. It looks to me, technically, it looks like it's going to go down further because it breached the line on the downside. Of course, there's no volume data on the HGX, so I can't really tell you what's going on. But then again, volume today, well, you got your high frequency trading algos skewing that all together, so you really can't look at volume today, can you? Next. Okay, what's going on with the 30-year fixed? Looking at a 6-month chart here, kind of inching up, but still within a kind of like a wedge pattern. Let's look at the 5-year chart data. Here's the wedge, larger wedge, and here's a smaller wedge here. Okay, so you have a larger wedge that has formed 2-year. Almost a 2-year wedge, and then a little smaller wedge here is about 6 months or so. What are interest rates going to do? At this point, they look like they're going to go up, but hey, it's all up to Yellen, isn't it? It's all up to Yellen, and that is a shame. that is a darn shame, because no one can apply logic or any type of analysis, economic or otherwise, to this market. Well, we'll see what next week brings. And then I'm off to Washington State for a much needed vacation. And until then, bid well, hats off, no fear.